Well, this is one of those days where I'm just going to encourage you so much to stay to the very end of this video. This is going to be a wild week. It's enough that we have the Ukraine war issue maybe coming to a head right now, and maybe some decision might be made this week. That wouldn't impact markets very much, would it? Or maybe the China tariffs. That could create some headlines this week, I'm pretty sure, and that would, impact markets. That's not enough. We have to have also a huge week on earnings and economic news. I mean, big time. So many companies with their earnings this week, significant Apple and others. And then economic news, I don't know, earnings. I mean, I'm sorry, wages and payroll and unemployment and employment and holy mackerel, what a week. Well, okay, and then we'll, of course, at the very end, we'll give you the pre-market and where things are right now in the pre-market and put the entire thing into the context of where we think markets are headed, as well as where we think Tesla might be headed. Now, we're going to run this early tonight, so we won't have the Tesla pre-market yet, but the late show at 7:45, I'll start off with that pre-market information about Tesla. Okay, so we have a nice online duel today. They didn't know they were dueling, but I saw these two responses and I thought, man, 𝐒𝐮 Basher and AJ, two people I respect a ton, couldn't be further apart in terms of their view of how the next year and a half or year and three quarters are going to go. After that, I think they might have a lot of agreement, but with regard to now to the end of 2026, 𝐒𝐮 and I are pretty much on one page, AJ pretty much on a completely different page. So let's talk first about 𝐒𝐮 Basher's new post. He says, look, there's some stuff that's going to come out of the Robotaxi that you may not be, yeah, I mean, most of you probably have all of this figured out, but maybe not. So that's why 𝐒𝐮's posting it, because he says, look, he sees four ways that the Robotaxi is going to impact revenues and profits and just everything within this period. Okay, once this Robotaxi starts rolling out in June, it's going to have a bunch of other impacts. So number one, he calls the halo effect. People getting into Robotaxis in Austin and then in maybe Dallas or maybe in San Francisco or wherever, people getting in and out of these robo-taxis, seeing the cars driving around without anybody in them in the driver's seat, and probably some kind of nomenclature on the car, some kind of way. Maybe they'll be painted a certain color, maybe they'll have something on the top, maybe they'll have something on the doors. I don't know, but I'm pretty sure that they'll be identifiable. And that, of course, will create folks that are paying attention to them as they're just walking by or driving by. But then the folks that are passengers, it will spark excitement in them. All of these things will drive demand for Tesla vehicles, in particular, as we're seeing the whole idea of the fact that they really can self-drive. So the idea will be, I want to be one of those. I want to get me one of those self-driving machines, he says, so I can sleep while I go to work. Number two, he says the add-on effect. Current Tesla owners who haven't opted for full self-driving yet may be inspired to purchase or subscribe to it. I'm beginning to talk about that all the time now. I want you to, if you haven't done it yet, I want you to go out there and try it again. It's so much better. It really works now, okay? So a lot of people are going to do that. They're going to be eager to tap into the autonomous driving experience. So people that don't own it may want to own it. People that aren't subscribing right now will try again and subscribe to it again. My guess is that Tesla will offer a month free again, or a week free, or something like that, to get people interested in giving it a try. Number three, he says, is the opportunity effect. Entrepreneurs and companies will see Robotaxi as a business opportunity, ordering cybercabs or even before cybercabs are out, ordering other Tesla vehicles to build their own fleets. Meanwhile, ride-hail drivers may ditch platforms like Uber, investing in Teslas to generate passive income through autonomous rides. And of course, lots of those folks already have Teslas, and we're already getting reporting on YouTube of people that are giving autonomous rides to their passengers, even though they're sitting there still supervising, and the passengers are like, yeah, giving them straight A's. His quote here, he says, "Make money while I go to the beach. Heck yeah, I'm gonna buy me two of those." Anyway, and then he says number four will be the value effect. The used Tesla market will shift vehicles equipped with purchased FSD and AI4, yeah, it's called AI4 now hardware, could see their value rise. Older models, if upgradable to AI4 or AI5 with compatible camera suites, may also see appreciation. I think that those are four really, really good things. I think that those things are all going to happen. I also think that the word of mouth will be the best word of mouth of any product in history, because once this comes out and it's fully working and you can sit in the back seat or sleep or play games, then every single Tesla owner who's using that service, that system, will be showing it to everybody they know. They'll be taking everybody on a ride with that. So you'll have word of mouth like crazy. And that word of mouth will sell more vehicles and get more people interested in the stock. So the more people that are interested in the stock, supply demand, you remember that curve, from college. What happens with more and more and more demand, same amount of supply, and you get a substantial increase in what people are willing to pay. All right, then you go to the opposite now. Now we're going to go to AJ's analysis. And if you subscribe to AJ, and even if you don't, I think you can get most of this on X if you want to go see the details, see all the charts and graphs and stuff. I'm just going to give you the verbal version of it. AJ sees 2025 revenues as flat and also profits as flat in 2025, which, given that energy is likely to double, okay, I mean, energy is going to double compared to last year, and he acknowledges that, suggests total auto revenues as negative, even with Juniper, Model Q, the ramp of the Cybertruck, and Robotaxi unsupervised coming out, and then maybe, total, Robotaxi regular, and then unsupervised driving coming out, all of which should increase sales. Anyway, well, it's possible that the impact on sales might really not happen until 2026. Or maybe it won't be big and measurable. But then in the first half of 2026, he still has sales the same as 2025. So I don't know. This makes no sense to me. I love AJ. I think AJ does a great job. I really think his analysis is great. I don't see how he can come up with this. And then the third Megapack factory should be producing product maybe by the end of this year, early next year. And he's also not showing any significant increase in those revenues in 2026. Now, I'll get back to that in a couple seconds because there's some nuance to that. 2027 and beyond, he shows very little increase in vehicle or energy revenues because he sees that as the units go up, the average selling price, whether that's a car or whether that's an energy storage system, goes down. So basically, even though he does see units going up on both, he sees revenues staying flat because the price per each going down. And by so much, going down by so much that the revenues stay about the same. I think that doesn't take into consideration that there'll probably be a lot more of the Megapacks being sold. And I'm a little bit nuanced to myself about the cars, the overall revenues from vehicles and the overall profits from vehicle sales, because by 2027, late 27, going into 28, they might not even be in the business of selling cars anymore. Anyway, he also is way slower than I would be in terms of revenues from Optimus, because if Optimus does come out second half of next year, and let's say it's, July, August, September, something like that, then the unit volume and the amount of profit per unit is going to be substantial, and he's showing almost nothing at all for 20. In fact, I think he's showing nothing for 2026 in terms of Optimus revenue or profits. He starts to show quite a bit more in 2027 and going into 2028, a lot more, and the curve begins to go way, way up. And that's why I say he's on both Robotaxi and Optimus, he's way closer to where CERN and I would be in terms of those numbers. So let's see, his total EPS. His total EPS not that long ago, let me see, I want to get this right. He has a total EPS now of $9.10 in 2028. I think that's way too low. He has these share prices. So he was at 600, I want to say, it might have been 550. It might have been, I think it was 600 or 650. He's dropped that way down for the next 12 months. He now has a 300 to 360 over the next 12 months. We're almost there. And as far as I'm concerned, we probably will be there shortly, very shortly. As you know, I think it'll be at 488 by the end of May. So he and I are far apart on that number. We should both be able to see our bets play out in 35 days. And at least mine will play out in 35 days. He has until the end of the year to get to 300 or 360, but I'm saying it'll be 1,000 by the end of the year. So we're many percentages difference there, like triple. Okay, so that's his bet for the 12 months, and then his bet for 24 months is 660 to 730, where I'm showing 3,000 by the end of next year. So again, I'm about 300% of his number. And then by 2028, he's got it about 1,600. That does include Optimus. So by 2028, 1,600. Obviously, if I'm at 3,000 by the end of 26, I'm way higher by 28. I don't know that I've ever put down a number for 28, but but there you go. There's AJ's analysis. He's showing a much more conservative ramp between now and the end of next year. And the funny part is, I don't see really how he can get the numbers that he's getting when we're introducing Cybertruck, and he does show a tiny sliver of sales for Cybertruck, introducing the Optimus. We've got the Optimus working in the factories, therefore reducing the cost of goods sold, which should impact profits starting the end of this year and definitely be impacting profits next year in a fairly significant way, maybe $1 billion or more, maybe a couple of $1 billion next year, maybe even more than that. FSD being able to capture more of the FSD dollar, FSD prices maybe going up. I mean, there's so many things that he doesn't seem to be taking into consideration. Now, it was, what do you call it? Nighttime, it's sleep time. He would be asleep from the time that I started preparing this, so I couldn't really talk to him before I did this, but I'm hoping maybe to have him on Friday. Maybe he and I can duke it out and see where we come down. All right, this is Randy Kirk. Please like, subscribe, notify. What we got later tonight is maybe one of the most interesting shows I've ever done. Grok and I worked on it together to come up to the numbers that we came up to. You don't want to miss it, 7:45, and we'll also have the pre-market on. Well, maybe we'll spend a minute talking even about the pre-market in general, because, hey, a couple of hours, 3 hours from now, it can be a lot different than it is now. 3 hours from now? Yeah, 4 hours from now. Okay. Join Patreon. Okay, are here. You can join right here. I become number 4. I've got 3 members now on YouTube. So you could be the 4th. And YouTube, I think, is cheaper than Patreon. All right, let's go on now. Coming up this week in terms of the economic reporting, we will start on Tuesday. There's not a thing at all on Monday. So Monday might be kind of a day where we can all relax for a minute, except I think that's the day for, I don't know, whose earnings are on Monday. I forget. Okay, I won't say until we get down to earnings. So what we got is on Tuesday, we start with a number that nobody usually pays any attention to. This is the advanced U.S. trade balance in goods. This used to be, like only the geeks, only the people that really get into it would have cared. Well, now everybody's starting to care about it. So last month, this was 147.8 billion. Nobody's making a guess on that because obviously it's really in interesting flux right now. So if this is down, that would indicate lots of things. I'm not sure what we'll get from it. One thing would be that there would be less imports and maybe more exports. Our exports are the same, imports are less. Anyway, I would say this would be very hard to guess what it's going to be, but very interesting, whatever happens. Then we also have the advanced retail inventories. As you know, I don't usually pay much attention to that, but again, retail inventories might jump up a lot. Last month, they were up 0.1%, but people are bringing in a ton of merchandise, or have been bringing in a ton of merchandise until a couple of weeks ago. So we might see advanced retail inventories way up, as well as wholesale inventories up too, because of that very thing. Then we have the S&P Case-Shiller Home Price Index. Last month it jumped 4.7. I'm going to guess it'll be way under that. They're not guessing, but I'm going to say it'll be way under that 4.7, maybe getting down into a three handle, maybe like 3.8 or something like that. Consumer confidence last month came in at 92.9. We know that the consumer sentiment index was lower. So they're taking a key from that and saying that this will be lower also. They're thinking it'll be at 87.7. We'll see what happens there. Job openings, the JOLTS numbers, they've been coming down slowly but surely. At one point, they were over 10. I think they were maybe as close to 11 million JOLTS or job openings that were not being filled. Well, right now that's down to 7.6 last month. They're thinking it'll be down another couple of 100,000 to 7,400,000. All right, so that's everything for Tuesday. Is that enough? Oh, yeah, well, of course, there's earnings too. Then we got Wednesday, ADP employment. Last month was 155,000. They're thinking that'll be down to 110. I don't know. No idea. No clue. The GDP number. Okay. Like I say, there's nothing happening this week that could possibly impact the market. So last quarter, that was 2.4. This quarter, the people that were polled think it'll come in at 0.4% higher than the fourth quarter. This number could come in anywhere. I'm not sure why these people tried to estimate it, because what we have is we had some impact, huge impact on imports being pulled forward. I don't know if exports change one way or the other. You've got, whether the economy is slowing or not slowing. So hopefully, maybe we'll be able to look into the details of the GDP and see if we can come up with anything useful. But according to Bank of America and others, the consumer's still spending. According to the labor numbers, which we'll see on Wednesday and Friday, it doesn't seem like labor is slowing down. So it could be that short of all the craziness of the imports and export numbers, it might be that we still might be around, 2 or more in terms of GDP. All right. Then we've got employment cost index. Last month it was up 0.9%. Employment cost was up 0.9%. That's really high. And this month they're saying it'll be up 1%. That is really a lot. Okay. So that would be the ADP number. Okay. Then you get the Chicago Business Barometer. They're thinking that will drip down a bit from 47.6 to 45.5. I don't have a clue on that one. Consumer spending. Last 2 months, what we've been seeing is this. So we got consumer spending and then personal income. What we've been seeing is personal income up a lot and spending not up a lot. So last month it was consumer income was up 0.8%, but spending was only up 0.4%, which would suggest people are saving, paying off their credit cards, whatever. This month they're thinking that's going to reverse, but not that big. Consumer spending at 0.5% and income at 0.4%. These are increases. So in a sense, this would still mean that for the first 3 months of the year, the consumer pretty much is saving money. And again, that would make sense, but that their income has not been that bad. Their the income, if it still comes in at 4%, 0.4% rather, that's almost 5% a year. So that would be a good number. All right, then what we also get on, what is this, Wednesday or Thursday? I forget. This is still Wednesday. So we also get on Wednesday the PCE. All right, the headline number last month came in at 0.3. They're thinking it's going to come in at 0.0. That will be a good number. Then following that, we have the year over year. It was 2.5. They think it might come in at 2.2. This would be outstanding. Now, again, this is the regular PCE number, not the core. Now we get the core PCE index. Last month, it was at 0.4% up. They're thinking this month, the core will be at 0.1%. That would be wonderful. Nobody could argue with that not being phenomenal. And then core PCE year over year, 2.8 last month. They're thinking it's coming at 2.5. There would be no reason if these numbers come in like this or any lower, just this, if they came in like this, or if they came in even a little bit lower, I'm saying are lower. Now, if they come in much higher, what I'm saying wouldn't be true, but they could come in here or lower. This would give the Fed the okay, go ahead, lower rates. these inflation rates would be outstanding because all of what they're showing is the directionality. And remember, tariffs are not inflation, they are price. So, and the Fed knows this. It's been said over and over the last week. Everybody's finally saying it out loud. Now, everybody doesn't get it right every single time, but a lot of major economists and major pundits and other folks have been saying you got to keep in mind that tariffs are not inflation; they are price. Okay, so then you've got the pending home sales. Last month that was up 2%. This month they're thinking it will still be up at 1%, up another 1% for pending home sales. That would be good news also. All right, then on Thursday, we're only to Wednesday. Couldn't they have put some of that on Monday? Anyway, on Thursday, we've got the initial jobless claims. Last month was 220. I'm sorry, last week was 222. This week they think it'll be 226. That would not cause anybody to think one way or the other. Then we get the S&P final U.S. manufacturing PMI. The previous reading was at 50.7, and they aren't giving us a directionality on that. Nothing, no guess on that. Then ISM manufacturing, they're thinking that's going to drop from 49 to 47.8. So I'm not sure why they don't think the other PMI is also going to show a drop. Don't know. But they make no guess on that one. All right, then we got construction spending. Last month was up 0.7, solid number. They're thinking it's going to be up 0.3. That's a solid number. So that would be good for the economy. That would be good for labor. That'd be good for everything. Auto sales last month were at 17.2% up. And people were saying that that was people that were running ahead of the tariffs, trying to buy the car before the prices went up. Nobody's guessing this month in terms of what they're going to be. So we'll see what happens on Thursday. Then we go to Friday, which is payroll day. And we've got last month was 220,000, which was a huge beat. Nobody was expecting that number. This month, they're expecting 130,000. Remember, we will always pay attention also to the adjustments, because even though the new administration has been in place for 3 months now, they may or may not have had a chance really to get these numbers under control and to get them more appropriate. So checking out the adjustments will be a very big deal on this Friday. But 130,000 would still be a strong number. Once again, 130,000 or more, I would say even 110,000 or more, and the Fed would have every reason to think they could cut. Now, the unemployment rate, they're thinking will stick at 4.2, which is where it's been. And again, that'll be fine. It's a middle of the road number. You know, if it gets up to like 4.75 or to 5%, then that's when the Fed is going to start to panic. So they won't be reducing the interest rates because of panic. They'll be saying, we can. This will be, okay, 4.2, that's fine. But the inflation rate is, 2.5 on the core. Okay, we should. And they should. U.S. hourly wages last month went up 0.3%. They're thinking it's going to do that again. That would be a little higher than the Fed would like to see it. Hourly wages year over year was 3.8%, and they're not giving us a guess on that one. And then factory orders last month were up 0.6%. They're thinking factory orders are going to be up 3.4%. I don't know. Where are they getting that number? That would be a shocker. That would be, I think, good news. I think that would be positive on Friday going into the weekend. All right, then here we go. These are not in the order, I don't think, of days. No, they're not in the order of days. They're in the order of maybe importance. I'm not sure. Anyway, Amazon, Thursday, May 1st, after close. Amazon's Q1 results are critical due to its dominance in e-commerce, but also cloud computing. Everybody pays attention now to what they're doing in cloud computing and their AI investments. So people are going to be looking to see how do they do, how are they still competitive in AWS? What are they doing in some of this AI things? What are their projections? They're not going to be impacted by the tariffs that much or any of that kind of stuff. There will be some, because some of the companies that deal on Amazon will be impacted by tariffs. So it'll be interesting to see what they say about tariffs. I think that, yeah, it'll be useful to see what they say. I misspoke a minute ago. Okay, then we got Apple. They come in Thursday also after the market close. Of course, Apple's earnings, we'll see maybe some pull forward in terms of people getting their phones. Of course, a lot of their revenue, a lot of their profits are based on the software on the App Store. But overall, one of the big things will be what are they doing? We know they're planning to move their production to India by next year for U.S. consumption. I'm sure there'll be talk about that. But yeah, other than that, yeah, they're impacted by tariffs. What will they say about that? Microsoft. They are on Wednesday after the close. Of course, Microsoft will also they have the Azure cloud service. How are they doing? Are they competitive? Are they losing share, et cetera, is always a big question with regard to Microsoft. Analysts are anticipating robust cloud revenue. And then they've got the AI side. How are they going to monetize the AI that they've been spending money on? Meta Platforms is also on Wednesday after the market close. So those 2 days are going to be crazy after close. Meta's ad revenues and metaverse investments are in focus. The ad growth is expected, but investors want clarity on how AI spending is going to continue. Will they continue to spend the amount of money they've been spending on AI? And when are the results going to come in? Visa comes out on Tuesday. So when that comes out, we're going to get to see, are the consumers, I mean, Bank of America has already told us, but what is Visa going to say in terms of the health of of the people that are borrowing on Visa or, using their credit cards on Visa, what's happening, with their payment trends, et cetera. That's what everybody will be interested in. PayPal, kind of the same thing in a way. That's after the market close on Tuesday. They will indicate whether people are moving more and more to fintech, which, that's what's expected. But people will be looking for user growth, what's happening there, and how their margins are doing. Coca-Cola is a consumer company that is not going to be impacted by tariffs. What's happening with Staples? What are they doing about their global reach? Are some of the things that are going to be in that one. Starbucks has been under a lot of pressure recently, but that's discretionary spending. Is that more pressure? What will their guidance look like? MasterCard, we already talked about Visa, same reasons. By the way, Starbucks is on Tuesday, MasterCard is on Thursday before the market opens. And then finally, Eli Lilly. This will be a big one. Some people think that Eli Lilly should become number 8 in the Magnificent Eight. Their earnings have been driven by their weight loss drugs. Investors are wondering about production capacity and also competitive pressures from some people that are coming up with other versions of these weight loss drugs. So there you have it. I'm exhausted. All right, let's take a look at what's happening in the pre-markets right now. Oops. My computer should, well, okay, here we go. Let us start I don't think we're not going to get bonds yet, are we? I don't think so. Well, maybe the 10-year. No, this is where it was on Friday. So we're sitting at 4.255, by the way, on the 10-year. Again, and my show at 7:45. We will bring you up to date on bonds because they're not trading yet. We've got oil up 43 cents, back to 63.45. Brent up about the same amount. Natural gas down, back, still sitting $2.93, well under $3, down 20 cents. I mean, sorry, 20%, 0.2% in the pre-market. Gold is down. Well, no, it isn't. That's what the headline says. I shouldn't have read the headline. Gold is up $23.40, sitting at 33.21. That's about where we were most of Friday. So not a lot of movement, at least right now in the pre-market. Silver down a tad, 0.06%, $32. Well, call it 33, might as well. And then copper is up 0.09% to $4.84, still under $5. The dollar mixed, but the dollar is doing better. People are talking about, oh, the dollar has been creamed. The dollar was way up here. It was every day was a new, recent high. And so the fact that it came back down a little bit, I think people were losing their minds over something that wasn't that critical. We have Bitcoin down 412 at 93,866. So staying firmly in that new spot in the low 90s, low to mid 90s. And okay, then we get over here to the pre-market, which has got to be here somewhere. Something's happened to the pre-market. Somebody stole my pre-market. Oh, this is really funny. It is not here. How could that even be? They've okay, I'm going to go ahead and go on to onto my computer here, and because I've got to get you that information. Let's go ahead and take a look at this. You guys can just tell me. You can look at your own right now and tell me what's going on. Okay, so we have got, what do we have here? Something is weird. Okay, no, that's not the pre-market. They don't have the pre-market on the website either. So they've got some kind of a glitch right now. So I'll bring you that at 7:45. We'll have to do that in the later show as well. Very, very bizarre. It's not even listed in their list of things that they are showing at the top of the page. What if I go into, let me just try something here. Go here. I wonder if those other numbers were updated or not. Some kind of a mistake here, something going wrong with their system. Yeah, I can't even get I can't get it to go into, so weird. So here it says the stock futures are ticking lower as investors brace for a busy earnings week. That's right. I had looked earlier and they were barely lower earlier, but right now they're just not even showing them to us, which is a very, very unique situation. In 2.5 years of doing this, I don't think I've ever seen that happen before. All right, so at 7:45, I will bring that back and we'll talk about that. Okay, so later on tonight, as you know, 7:45, tomorrow, regular day. Brian White is back from China, so it'll be interesting to see what he learned at the Shanghai show. And Larry Goldberg, as always, regular program in the morning. This morning, CERN Basher. No, sorry. Phil Beisel, part two. Very interesting analysis of how Robotaxi is going to like move through the steps. What's going to happen? What's happening now? What's going to happen the week of? What's going to happen after the week of? How are they going to decide when to go into other cities and whatnot? Phil, as you know, really gets down to the weeds on this stuff. If you like getting down the weeds and you missed it, I'm putting the card right there so you can go back and check that out. Okay. See you guys in a few hours at 7:45. It's been great talking to you.